counters are in focus, and especially the steel stocks.
Absolutely. First and foremost, so welcome aboard, Shrishti, to Buy Now, Sell Now. Shrishti will now be co-anchoring with me the show of Buy Now, Sell Now. So you know who's the person for you all to direct all your queries to. It is definitely Shrishti and myself. But let me get going with the markets. And like Shrishti did mention about what the markets are doing today, a somber start coming in for a brand new week. If you look at the benchmark indices, it's declining trading session. You have Nifty that's trading lower by about 130 odd points. You have Sensex that's trading lower by over 450 points as we speak. We are actually maintaining that downtick. We've not seen the markets drift lower from where it actually began trading. If you look at Nifty Bank, that's the one also that's trading low, but it is outperforming the benchmark indices. The cuts on the Nifty Bank are much lower when you compare it to the benchmark indices in today's trading session. Let me take you through the list of gainers and losers in trade today. If you look at the list of gainers, you have a couple of stocks that are gaining, but none of them are gaining upwards of about 1%. So if you look at BPCL, they're seeing a strength of about 0.8% as we speak. Axis Bank gaining about 0.7%. Bharti Airtel 0.5% uptick. Maruti Suzuki 0.5% uptick. So like I mentioned, none of these counters are seeing a strong strength in today's trading session. Advanced decline ratio is in favor of the decliners as of we speak. ONGC, SBI Life, Bajaj Finance are the top losers. You have Reliance Industries, that's the one that's seeing a downtick about 1.6% as we speak, and that's the one that's dragging the Nifty lower at this particular juncture. Talking about the sectoral indices, you have the PSU Bank Index once again bucking the overall market trend. 1.2% uptick coming in for the Nifty PSU Bank Index. So a stellar show once again coming in from this particular index. Remember that it has been outperforming the benchmark indices and Nifty Bank of late. Talking about the list of losers, you have Nifty IT Index that's under pressure. You have energy sector that's under pressure as well. And along with that, you can add even the pharma sector that is seeing some sort of a downtick in today's trading session. That's the way how the markets are trading at this juncture, Shrishti, but definitely all eyes on the steel counters.
Well, yes, absolutely, Cheryl. Steel counters are in focus on the back of the export duty that has been rolled back by the government. But let's get across my colleague Ashesha, who is joining us with all the details why the steel stocks are in focus today. Take it away, Ashesha.
Yes, so all those steel players, the likes of Tata Steel, JSPL, JSW Steel, are seeing muted reaction in trade today. We are seeing the likes of NMDC and Jindal Stainless, which are gaining anywhere between 2.5 to 6% in today's trading session. We also have Sarda Energy and Godavari Power, which are gaining 5 to 12% respectively in trade today. And this is because the much-awaited announcement of export duty rollback has finally come through. The government has gone ahead and reinstated export duty on steel, stainless steel, iron ore and iron ore pellets to pre-May 2022 levels. This was more or less on expected lines. Markets knew that this was a short-term phenomena, and hence it is not much of a surprise for the markets. For steel companies in particular, important to note that domestic prices have declined nearly 21% since May. But export prices today are lower as compared to domestic prices, and hence it does not make sense for mills to export, and hence they are not exporting, and we are not expecting any near-term benefits as far as increase in volumes, export volumes are concerned. Additionally, landed cost of imported steel is also 13,000 rupees lower per ton as compared to domestic prices, which will limit the upside for steel prices domestically. Let's move on to iron ore players then. It is still not profitable to export high-grade iron ore, although we will see an uptick as far as low-grade iron ore is concerned, whereby export duty has been reduced from 50% to 0%. Jindal Stainless Steel, the next one, it is gaining nearly 6% in today's trading session, and it will enjoy a lot of opportunities in terms of export. Remember, export landscape is very favorable for Jindal Stainless as compared to its carbon steel peers, which are located in Europe, and that is because of high cost of production that European players are enjoying, and hence Jindal Stainless Steel will be enjoying good opportunity, and on account of that, Jindal Stainless Steel is soaring in trade today.
All right, thank you so much for that, Ashesha, for putting into context what government has done, what it means for the steel players. But let's bring on board our experts for today. We have Kunal Bothra as well as Mr. G. Chokkalingam joining us on the show. Very good morning to you, Kunal, as well as Mr. Chokkalingam. Thank you so much for joining us on Buy Now, Sell Now. Mr. Chokkalingam, coming to you. How are these counters poised now? We know that the export duties were imposed in order to tame the inflation back home. Also, it did impact the steel prices and the profitability as well. But from here on, how should one poise themselves when it comes to the steel sector? We are seeing globally the steel prices cool off as well.
Exhaustively the negatives of the industry. I am in tandem with your view. I would say that the investors can use this opportunity to exit, particularly stock like Tata Steel, because as you mentioned, export prices are down, domestic prices are down, and not only that, Chinese growth is terribly down. European economy is getting into recession, and therefore it's not a time to rush to buy steel stock. December results also will be pathetic, as exports are accounting for less than 20% of the total sales for Indian companies. This is not going to help much. In fact, Tata Steel will be the worst affected company within the steel sector, because I believe right now European gas prices are 5 times more than what it is in the US. US steel industry is in a better position than the European steel producers. So considering all these facts, one should exit Tata Steel. If one is losing money in JSW, one can hold on to it and wait for December results. Before seeing December results, I would not advise any accumulation of steel stocks. One can better look at large banks where banking industry credit growth is in strong double digit.
Okay, so that's the fundamental take coming in when it comes to the steel stocks, and especially from the likes of the large caps like Tata Steel as well as JSW Steel. But Kunal, coming to you, that we did touch upon all these large caps name, but if we see some of the other counters like Godavari Power, that's up 13%, Sharda Energy up 4%, even NMDC is holding gains of around 2% as of now. Any of these counters on the back of the news is looking attractive to you?
Good morning, everyone. So my belief is that most of these metal stocks, they would probably get into a bit of a range or a correction for themselves. Now, specifically on the larger cap fronts, the likes of JSW Steel, of course, looks the most stronger one. But then Tata Steel is the one which looks extremely weak. As you can see on the charts as well, the stock has been making consistently a pattern of lower highs and lower lows. So even at current levels, with this kind of a news flow, the stock is not getting any kind of a major relief rally for itself. And that generally indicates that the weakness on the charts for from a longer term basis for Tata Steel is acting a bit of a resistance for the stock. So I would probably be of the belief that most of these metal names, specifically large cap ones like Tata Steel, they could be under some heightened selling pressure, and they could probably see some bit of more downside over the near term.
All right, so that's the take coming in from Kunal as well as from Mr. Chokkalingam on what they say about the metal space, in particular the steel counters. But on that note, we'll actually slip into a break on this edition of Buy Now Sell Now. But when we come back, viewers, we will start taking your queries, so do write into us and stay tuned.
आग को फैलने से रोकना मुश्किल।
But if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees. Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge. With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, सब साथ बढ़े. I would like to live this philosophy in whatever business we do. We continue to be very well diversified across product lines. The general health of the company continues to be very strong.
We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
ET is one of my favorites in the world. I'm a fan.
This is a very insightful question that you're asking, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
And if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees. Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge. With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do. We continue to be very well diversified across product lines. The general health of the company continues to be very strong.
We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
ET is one of my favorites in the world. I'm a fan.
This is a very insightful question that you're asking, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
And if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees. Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge. With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do. We continue to be very well diversified across product lines. The general health of the company continues to be very strong.
We are a publicly listed company. We have access to capital. We have great.
करते हैं गोल्ड लोन मेला। गोल्ड लोन लेने पर पाए सुनहरा मौका कपल्स के लिए फॉरेन ट्रिप जीतने का और साथ में जीते कई आकर्षक इनाम। यही नहीं, हर ट्रांजैक्शन पर होगा 24 कैरेट गोल्ड आपके नाम। अपने फ्रेंड्स और फैमिली को रेफर करने पर भी मिलेगा खरा सोना। गोल्ड लोन लेने के लिए आज ही मुथूट फाइनेंस की ब्रांच में आए या फिर घर बैठे बैठे गोल्ड लोन पाए। आज ही कॉल करें 1800-313-1212।
Welcome back. You're watching Buy Now, Sell Now on ET Now, and time to ask the most important question to Mr. Chokkalingam, where all the retail investors are definitely tuned in and watching to know what should their strategy be and what should they do to keep their wealth intact. Mr. Chokkalingam, markets did see a steady recovery almost inching towards that record high levels. But then now markets have taken its time to take a breather from that rally. In this particular scenario, what should retail investors do? How should they continue to protect their wealth and not get jittery?
Yeah, basically, never invest borrowed money in Indian equities, and two, always manage the risk through proper asset allocation. Never put 100% of your investable financial wealth into equity. Normally keep it at around 50-60% of your financial wealth other than the real estate in the equity. And third, it's very necessary that one should not be 100% in small and mid cap because of late the volatility is huge. Millennials, some of them do not care for the valuation. Even a company with a great valuation, great results can still fall 30%. So that is the case now, or norm now. So therefore, third, the guiding factor is that at least put 30% in the Nifty Sensex stocks, balance 70% you spread across small cap to large mid caps. So these are the three macro level. Now coming specific to the market, I may be wrong, but I am extremely bullish on Indian market, particularly for last few days. Last week, the oil price has cracked 8.5%. And surprisingly, oil price has come down by 32% from 52-week high of $128 to now $86, $87, which is a big positive for Indian markets because, everything, forex reserves, trade deficit, rupee exchange rate, inflation, all are related to oil price. So it's going to make a big difference to Indian market. And in fact, there are reports of huge floating storage of oil purchased by investors, and they are floating on the water. And that oil also can come to the market if it falls further. So I believe the market will pick up a stream in the short term itself. So therefore, go for quality stocks, as I mentioned, 30% in the Nifty stock, and have a tilt towards banking stocks, because after a long time, the banking credit growth has come to 15%, which is too good because now the banking sector has reduced the net NPA substantially. So look at the banks like HDFC Bank in the large cap space. I think time has come for HDFC Bank to outperform.
The time has come for HDFC Bank to outperform is what Mr. Chokkalingam is saying. You need to have a quality stocks in your portfolio tilt towards banking space. And yes, Mr. Chokkalingam is definitely bullish on the Indian markets given the tailwinds that are in the favor, or macro tailwinds that are in favor of the markets. But let's kickstart then with your queries then. And yes, viewers, we are live on Twitter, Facebook, as well as on YouTube. You can write to us on those platforms as well, or you can write into us on our WhatsApp number that's flashing on the top of your screen. Do mention your name, the stock that you're asking your query on, the time horizon that you're looking to hold the stock, and if you already purchased the stock, do mention the quantity and the price that you purchased this particular counter. Let me kickstart with the queries then, and the first query that I have is coming from Sri Kutan. And Kunal, I'll come to you for this one. He's already holding PI Industries about at the price of around 3,400 rupees per share. He wants to know a 3 to 6 months view on this particular counter.
Well, a 3 to 6 month view could be bullish on PI Industries. The stock, I think, last week or so delivered results, and the reaction post results was quite enthusiastic for the stock. It made a fresh multi-week, multi-month high for itself, about the 3,600 mark, or just closer to the 3,600 mark. Now, the only concern is that from those result highs, the stock is down, approximately 10% towards 3,300 levels. You've bought at 3,400. I would still suggest to hold on. But then I think 3,600 could be a moderate target which you can look out for over the near term for PI Industries.
Okay, so that's the take coming in on PI Industries. But Kunal, for the next query also, let me come to you, because we did touch upon all these steel counters, and Mr. Partha Sarthi has a question where he says that he is holding 600 shares of Tata Steel at an average price of 118. What's the view coming in? Can he hold, sell or switch? But he's a long-term investor. So in the medium to long term, what are the levels that you're watching out for?
So only from the short-term play, that's what I indicated on the chart as well, that I would be a bit skeptical on Tata Steel, and I would expect the stock to underperform or remain an underperformer with respect to most of the other large-cap metal names. But then there will be a phase where Tata Steel would remain, the underperformance of Tata Steel would probably be quite divergent to the entire metal pack, and that could be a point where you may see Tata Steel covering up the underperformance. So if you're a longer-term investor, I think 118 is a decent buy price for you to hold on. I would suggest to hold on, specifically if you're a longer-term play.
All right, this one is coming from Satya, and this one is for you, Mr. Chokalingam. He's told me to thank you for Bank of Maharashtra and Nesco, the views that you gave on both of these counters. I believe that he's benefited from both of this. And the other query that he has is whether are you still bullish on Zensar Tech?
Certainly, yes. In fact, we have personally invested, Economics also invested. A, the stock has come down by 60%. B, I have been always using enterprise value to annual IT revenue. In fact, it came under criticism also, but then it worked out very well. Whether you take Polaris or Mindtree or there's so many companies which were taken over when they had enterprise value to IT revenue was very cheap compared to the peers. And if I apply the same logic, now Zensar also, it's a less than one time enterprise value to annual revenue. Why I use it is that for a bigger company, when the enterprise value is less than the sales, it is easy for them to, bid for such company and give premium and consolidate. Of course, I am not at all forecasting that Zensar will be taken over or sold out. I am explaining the rationale of using the methodology. From that methodology, this stock gives tremendous confidence. Third, if you look at the digital platform, it's quite surprising that Zensar has got one of the highest, share of digital platform from the total IT revenue generated. It's close to 70%. And such companies like Happiest Mind, they have more than 95% digital platform and they command a huge premium on the markets. So considering all these facts, I firmly believe that Zensar is a great appealing buy at current price. Once again, I would like to repeat the disclosure that personally and also Economics invested in Zensar.
Okay, but moving on, Mr. Chokalingam, let me take the next query from you. It's Riti from Ambernath, and she wants to have a view which one of the two counters that she has in mind will be good for the long-term buying. First one is Fine Organics at the price of 6,000. Will that be a good entry point, or rather, she should go for Dwarkesh Sugar at a price of 93? What's your take coming in?
I would not suggest both of them because first, Fine Organics, there is no valuation comfort. In case it corrects at least around 10%, one can consider. Sugar sector, I would suggest wait because the cane prices have gone up substantially in the state of UP, whereas the sugar prices on year-on-year basis almost stagnating. So all the production costs have gone up, but sugar realization not improved. Unfortunately, if you look at some of the results of sugar companies coming from state of UP, even in ethanol, they are not doing well. So therefore, I believe that this is not the ideal time to buy sugar stock. One can wait for December result, then take a call. Okay.
All right, the next one that I have is coming in from Veeran Kuti and RHI Magnesita, India. He's saying that he's purchased it at around 647 rupees per share. Kunal, this one is for you. Any chance of it crossing its all-time high in the short term?
Well, the probability is there. The probability could be high for RHIM to cross back above its previous major highs. 705, I think, if I'm not wrong, approximately 700 and above was the previous highs for the stock. It's currently at 672. Crossed above the 50 DMA today, opened with a gap. The gap has not been filled. So ideally in this kind of a scenario, what you should be looking out for is to try and trail the stop loss and try to ride the trend as much as possible. Today's gap or the low of the gap today could be a decent stop loss. And assuming if the stock over the next 1 or 2 days makes a successive gap up opening, then you keep on trailing the stop loss higher and look to ride the trend on the upside.
Okay, but moving on, Mr. Chokalingam, the next query is specifically for you. And Ron from Mumbai wants to know that will this be opine on a long-term shift from Bajaj Finance to HDFC Bank?
Certainly, yes, I believe, because of course, Bajaj Finance is doing extremely well. Short to medium term, it may still outperform HDFC Bank. Long term, it is going to be difficult because let us not forget the the beauty of arithmetic. On a small base, when it has grown phenomenally, now the base is getting larger for Bajaj Finance. So that's what exactly happened to HDFC Bank. Still, it is surprising that on such a huge base, HDFC Bank is posting 18% profit growth on an average continuously. So that is the kind of situation will come soon for Bajaj Finance because arithmetically it is very difficult to grow at 40-60% forever. So may not be right now, but sometime, after 1 or 2 quarters, the investor can think of shifting from Bajaj Finance to HDFC Bank. the way the HDFC Bank, price to adjusted book value shrank after starting with a 20% year-on-year growth, similar thing would happen to Bajaj Finance, but certainly not now, maybe 2-3 quarters down the line. So therefore, after some time, the investor can think of shifting.
All right, this one's coming from Madhuri Balaji, and this one also is for you, Mr. Chokkalingan. GNFC and GSPL, he's saying, the Madhuri is actually saying that the stock price is falling for both of these counters. One, she wants to know what has changed fundamentally for these counters that she's seen such a drop in the prices, and does it make sense to look at them in order as a buying opportunity?
GSFCL I do not cover. GNFC personally also I have invested. The reason why it has fallen is, the result was a little disappointing, mainly because of, the gas price rises. And secondly, there was a provision for employment wages to the tune of nearly 48 crore. That has impacted. But I believe going forward, the company would be able to pass on. And therefore, I suggest investors not to get any panic on GNFC.
Okay, so that's the take coming in on GNFC. But with this, it's time to slip into a short break, but don't go anywhere. We'll be right back to take more queries from you.
Hello,
Friends.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
ET is one of my favorites in the world. I'm a fan.
This is a very insightful question that you're asking, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
And if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees. Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge. With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do.
We continue to be very well diversified across product lines. The general health of the company continues to be very strong. We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
ET is one of my favorites in the world. I'm a fan.
This is a very insightful question that you're asking, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
And if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees. Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge. With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do.
we continue to be very well diversified across product lines. The general health of the company continues to be very strong.
We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
ET is one of my favorites in the world. I'm a fan.
This is a very insightful question that you're asking, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
But if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees. Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge. With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC is great.
Welcome back. You're watching Buy Now, Sell Now on ET Now, and we continue taking your queries. The next one is coming from Naval Mehta, and long-term view on HG Infra. He's already holding some shares at a price of around 570 rupees per share. Mr. Chokalingam, what's your take on HG Infra? What should Naval do with his holding?
I'm sorry, I have not looked at this stock anytime in the past, so unable to give view.
All right, Kunal, do you have a view on this one, on the charts, HG Infra?
Well, I would suggest to hold on. I think it's an okay chart. More on the longer term basis, short term wise, does look very attractive. I think the stock has been more sideways at the 575, 580 mark where it's currently trading. That can be gauged by the flattening of the 200 and the 50-day moving average for the stock over the recent past. But then on the longer term basis, it's done reasonably well for itself and is going through a multi-month consolidation. So on a longer term basis, looks attractive. And if you have a medium term kind of a time horizon, I think you should definitely look to hold on.
Okay, next query coming from Sudha, and Mr. Chokalingam would like to have your answer on this. She has purchased IEX at a price of 206 and wants to know whether to hold or sell at these levels.
If she is losing, she can hold on. I would not suggest adding IEX or averaging it down because BSE has started the energy exchange along with the PTC. And I believe PTC used to give very significant business to IEX. And I think, since they have their own joint venture, that business might come to the new initiative of BSE. And, being a monopoly now, it is losing that status. And valuation-wise also, it is not very attractive. So therefore, I would suggest, not to buy or average it.
Right. This one is coming from Akash Mathur, and Kunal, this one is for you. And he's asking about Tata Power. He's already holding from the levels of 237 rupees per share. He wants to know whether he should continue holding for the next 6 to 12 months or should he exit. If I'm not mistaken, Kunal, this morning you had a sell call coming in on Tata Power, right? Does that hold when it comes to Akash's holding in it?
So I think longer term wise, you can continue to hold on. But, Tata Power had a dream run from the 2020 lows when the stock, I think, was just about some 50 rupees or 60 rupees. And from there, the stock had jumped up to almost 300 plus or just about 300 levels for itself. But then the stock has been struggling since then from the 2021 highs. And even at current levels, the stock doesn't have too much of a mojo for itself. From being a point where Tata Power was a stock which used to move in sync with the Nifty, the stock has now moved in complete disarray with respect to the index trends. So that's the only concern with the stock. But that would indicate that the stock would go into a downward trend from a very short-term view. So longer term wise, I think if you're holding on to the stock and if you have a long-term time frame, you can continue to hold on. It's just that from the averaging point of view, I think sub 200 levels would be a better level to try and average Tata Power.
Okay, but next question coming in from Mr. Ashish Maheshwari and Mr. Chokalingam. He wants to know take on two counters. Firstly is Patanjali Foods and the other one is Varroc Engineering, and he has been losing close to 15 to 20% in both of these counters. What's your take?
I mean, you can continue to hold both and hope for recovery. Once it recovers the cost, you can offload them, because in both I do not have valuation comfort.
All right, the next one is coming in from Dasarathi, and he has Info Edge 50 shares at a price of 4,600 rupees per share. Kunal, he wants to know whether what should he do with this holding, hold or exit.
See, as of now, we can hold on, but then the recent sell-off, the last 4-5 days of sell-off has been very intense for Info Edge. It's broken below the 200 DMA, the 50 DMA has been broken. The volumes were exceedingly high, which means that we could be in for a cycle where Info Edge may go into a sharp multi-month correction. But it's just that the very short-term charts are a bit oversold. So you may expect some bit of bounce, maybe 100 point, 150 point bounce from current levels. So I think closer to 4,050, 4,100 approximately, that could be a zone where you may look to exit the quantity.
Okay, Kunal, let's take the next query from you. This is Mercy from Bangalore, and he has taken Union Bank at a price of 70. He wants to know, is there a right time to book profits in this?
If you're a long-term investor, then I don't think that you should look to book profits in the PSU banking theme. I think these stocks have just started off into a big uptrend this month itself. So I would believe if you are a long-term investor, even if you've bought a levels of at 70 for a stock like Union Bank, I think you should continue to stay put.
Right, this one is coming from Nino, and this one also is a short-term query, Kunal, so I will direct it to you, or rather medium-term query, but he is asking a technical analysis on Surya Roshni. He's already holding about 100 shares at a price of 490 rupees per share. This one also has seen a strong momentum in between, Kunal. Do you think that makes sense to stay put with Surya Roshni for the medium term at least?
I think you should hold on. My belief, and I think last week also I had voiced my opinion over here that for Surya Roshni, I would believe that the stock would make a comeback for itself over the short-term basis. The stock has done reasonably well from the June lows, from being almost at 320, 330. The stock had rallied towards 500 plus, then consolidated, and now is making a comeback for itself. So I think it's a decent chart shaping up, and if you've bought at 490 odd levels, I think you should continue to hold on.
Okay, Mr. Chokalingam, next question is coming in on Tata Elxsi, and this Rajesh Vaid has 10 shares at a price of over 8,000 rupees. From the longer term perspective, he wants to know whether to expect a rebound in this particular stock coming in.
I doubt whether there can be a strong rebound in Tata Elxsi, because the valuations are extremely stretched even after falling 35-40%. But still, it's a high beta stock, and often it shows a lot of momentum. So therefore, I suggest investor not to add, but hold on to it. The moment it gets a cost price, you can exit Tata Elxsi.
Next one that I have is actually coming in from Narayanappa, and he's directed a question to you, Mr. Chokalingam, but allow me to take it to Kunal, because he wants to know whether he should hold or average this particular counter. So Narayanappa, I'll take this query to Kunal. 100 shares of Indus Towers, price is 283 rupees per share, Kunal, and 100 shares of IBREL, purchase at 190. Now he has both of these counters, wants to know whether he should hold on to both of them, switch or exit.
Now for Indus Towers specifically, I think you can continue to hold on. I think that stock is getting into a time-wise consolidation. The stock has established a major support at the 180 marks, and I think it's just marginally higher from those 180 levels. I call it marginally because of the major highs the stock had seen from those 300 plus levels. So I think it's establishing a time-wise base for itself, which is a good sign for Indus Towers. So maybe closer to 180, 185 approximately. That would be a very good level for you to average. For Indiabulls Real Estate or IB Real Estate, I think it makes a lot of sense to switch from this stock to either of the two names. You can look at either DLF, or that's a slightly high beta name, or if you're looking at a moderate beta kind of a stock, then I would recommend Oberoi Realty. I think these are the two names which you should make a switch from IB Real Estate.
Okay, next query is coming in from Jitendra, and he's holding Craftsman's Automation at a price of 2,100, approximately 50% of the gains coming in. But Mr. Chokalingam, he wants to know that for the longer term perspective, should he continue to hold on to these, or would you suggest some partial profit booking in this counter?
You can hold on for long term, because the growth story in Craftsman is really surprising. Unless it jumps another 10-15%, you can hold on for long term.
All right, this next one that I have is coming in from Sudeep. Let me just check. I think I've skipped a couple of them before I could go to Sudeep. So let me take the other one. Sorry for that. This one is from Manish Raju. He wants to know whether GE Shipping and TCPL, does it make sense to buy both of these at current market price for the short term? He's saying that he sees a good momentum in both the stocks. Also, if you suggest to buy Kunal, then what sort of strategy should he use? Either TCPL or GE Shipping. What should he do?
So you can look to buy both of them. I think both these stocks are very similar kind of charts, making new highs for itself on a regular basis, volumes inching up higher for themselves in this recent rally. But the only concern is the quantity at which you are buying. See, because it makes a lot of sense, to try and reduce the quantity when a stock moves exceptionally at higher pace for itself, because there is always a chance that if there is any kind of a mean reversion, the stock correction would be far more steeper and stronger over the near term. So you may be left out, buying the stock at the higher end with the higher quantity. So to try and adjust that, you always have to look out for buying initially at lower quantities and then look to add on dips. So assuming if GE Shipping, for example, corrects towards maybe 600 or 580, that could be a point where you may look to average further, and same would be the case with TCPL as well.
Okay, but continuing with some of the defense counters, Simran has a query on HAL, Mr. Chokalingam, but the entry point is just exactly the current market price, and she wants to know the view in short to medium term. Will that be good enough for from the returns perspective?
Short to medium term is fine. I mean, one can see another 5-10% upside, but one has to keep in mind that the PSU as a space itself is extremely cyclical. Last 20-30 year time frame, every third, fourth year they crash and they remain subdued for very long. And secondly, defense stock also extremely cyclical in nature. So keep this in mind, and if you get a decent profit of even 10-15% from current level, definitely one should exit such a defense stocks.
Okay, this one is coming from Hemant Datta and holding NTPC 100 shares at a price of 177 rupees per share. Medium to long-term view is what Hemantha wants on this particular counter. Also wants to know if can average at this time and what's the best time to average. Mr. Chokalingam, I'll come to you on this one. What's your take on NTPC? Does it make sense to hold on for the long term?
I have little doubt because the fuel costs are going up. There are no sign of the coal prices coming down in the short to medium term. So therefore, I would suggest that if he's getting a decent profit, he can slowly start exiting NTPC.
Okay, but the next question is from Palini Sami, and he wants to know the take on public sector banks, and the options that he has in mind is Bank of Maharashtra, SBI, BOB, as well as Union Bank of India. Kunal, any of these counters that you are liking at this point for a fresh entry?
Yeah, all four of them. So I think you should look to buy all four of them. You can distribute your quantity, I would not say evenly, but then see, so larger cap names or the higher market cap names like Bank of Baroda, Canara Bank, they would of course be the higher proportion for your holdings. They should ideally be higher proportion for your holdings. But then the likes of Union Bank, etc., you can probably drop down the quantity or the percentage share as compared to the reduced market cap for these names. But I would believe that it makes a lot of sense towards buying these stocks at at current levels, as well as use major dips or corrections. Like for example, maybe a week back, Union Bank had hit a level of 69, then the stock had corrected to 62 levels. So almost a 10% correction. That became a classical entry point. And from the 62, the stock is now almost at 74, 75. So if you can try and take use of the opportunity of short-term correction and 10% correction and average out your quantity, I think that would be a much better strategy.
All right, with that, let's kickstart with the rapid fire then. And the first one is coming from Vimla, and it's to you, Mr. Chokalingam. 1,000 shares of LIC at a price of 690 rupees per share. Good idea to hold or shift to defense names like Mazagon Dock as well as Cochin Shipyard.
Hold on LIC. Another 10%, 15% recovery is possible.
Okay, Shankar from Chennai holding Shobha and losing 15% as of now. Is this a hold or book loss at this point of time? Kunal, question to you.
I'll recommend to hold on, and if possible, just around the 600 mark, you should look to average as well.
All right, this one is coming in from Jaya Krishnan. Bajaj Finance, 70 to 100 rupees per share for medium term. Should hold, sell or average? At average, then what levels, Kunal?
I would suggest to sell or exit the stock. My belief is that the stock would go into a correction phase. I've already given the sell call for Bajaj Finance today morning.
Okay, Deepak from Bangalore wants to check whether or not to hold or sell 100 shares of Aptus Value Housing Finance, and he has bought these counters at a price of 332. Mr. Chokalingam, what's your take on this?
If he's losing money, he can hold on because I do not find valuation comfort.
All right, Joy Sheila Prema, Bank of Maharashtra, wants to know 1 year target, Kunal.
Difficult to project a 1 year target, but from here on, I believe that the stock should rally up to almost 35, 38 over the near to medium term.
Okay, Rajeshri from Chennai purchased GSFC 100 quantities at a price of 131. Want to know the technical view on this. What's your take, Kunal, there?
I would sense exit on rallies. Maybe if the stock comes back closer to your cost price, 130 approximately, good time for you to exit.
Okay, Ravi Chandran has a question on PNB, 5,000 shares at 50 rupees per share. Will it hit the target of 60 rupees per share in the next 4 months, Kunal?
Difficult to say on 4 months, but then if you can extend the time horizon to 1 year to 2 years plus, then there is a high probability.
Okay, Sunny wants to know from you, Kunal, that he is holding Newgen Software and 225 quantities at a price of 351, and this script has been underperforming in the IT index. What's your take on this?
Low liquid stock trading below its key averages 50 DMA, 200 DMA since quite some time. I would suggest to exit.
All right, and with that, we actually come to the end of the rapid fire. Thank you so much, Mr. Chokalingam, as well as Kunal, for joining us on the show, giving us a take on the steel stocks in particular, as well as resolving the queries. And viewers, don't be disheartened if we've not taken your queries today. We've just started the week, and we will be back tomorrow at 11 a.m. to take your queries and also talk about the particular sector that will be in focus on the lens. But for now, we slip into a break on this edition of Buy Now, Sell Now. Stay tuned, lots more on the other side, so don't go anywhere.
Is nation first, sab saath bade. I would like to live this philosophy in whatever business we do.
We continue to be very well diversified across product lines. The general health of the company continues to be very strong.
We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
ET is one of my favorites in the world. I'm a fan.
This is a very insightful question that you're asking, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
But if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees. Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge. With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do.
We continue to be very well diversified across product lines. The general health of the company continues to be very strong.
We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
ET is one of my favorites in the world. I'm a fan.
This is a very insightful question that you're asking, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely